Hello guys, this is Vineet from Edge Forex and we are looking at the daily chart of DXY or dollar index or Dixie, whatever you guys want to call it, doesn't matter. But I think something very interesting has been happening in this chart over the last few days, which deserves your attention. Okay, so we've seen that the dollar index or dollar in general is taking a beating since Trump tariff announcements earlier this year, or actually even before that. But the real drop came after Trump tariffs announcements has been falling precipitously all the way down into late June. But something changed between the fall that it took from April into June. And I'll show you exactly what. And it's my favorite subject, that is divergence. So the price is making lower lows. Okay, we're going to go into it a lot more, but I'm just pointing this out. This is the daily chart. So every candle represents a day's worth of price action. Okay, so the price is making lower lows, but the RSI is saying, I am getting momentum, but not on the lower side, not on the downside, but on the upside. So the price reversal was very, very near. And now it bounced back really sharply, like right from 96.25 all the way high to over 100, like 100.2, 100.3. So that was like a really, really sharp bounce. And then capitulation came in and it actually made a retest of that same level of 96.25. But in this time, again, the momentum said, I am not lowering. It's making a flat here. See, it's making retesting the thing. It's like a double bottom here. So there's one bottom and the second bottom. It's testing the bottom. But RSI is saying that, hey, even though I'm testing the bottom, but my momentum is high. So now I've got a double confirmation for both bottoms that it made. The momentum is on the upside, not on the downside. So now that's telling me the chances are more than 50% or 60% that the price has bottomed or this move has exhausted itself. So the next move is on the upside. So that is exactly what happened after this. There was another bounce and it tested the previous bounce level, which was a little over 100, like 100.2, 100.3. And then it bounced back. But I'll get into these lines in a second. But then it bounced back again. It breached it, but then it came back. It's now taking a breather right now, right under that resistance that's been formed in the last few months. And it's looked like a very, very strong resistance. But the underlying structure of the chart has changed. It's, in my opinion, what everything is telling me is become bullish, not bearish. The tide has turned. The move is on the opposite side. And why do I say that? So I have three moving averages also. So we spoke about divergence. Okay, let's also draw a trend line. Okay, guys. So the trend line is also broken. Okay, now it broke the trend line, it retested it and bounced back off of it. So that's telling me the price, the downward movement on this channel has reversed. And now the price, the least resistance for the price movement is on the upside and not on the downside. Okay, that said, I have three moving averages, smooth moving averages, 21-day, 50-day, and 200-day. The green one you're seeing here is the 200-day, really long-term moving average. The blue one is the 21-day, and the purple one is, the purple one is the 21-day, the blue one is the 50-day. So now what's happening is the short term, the faster moving average has crossed over the middle moving average. So now and see, even the price is kind of bouncing off of that moving average. So all these signs are bullish. The price are making, if I zoom in, is making higher highs, higher lows, higher highs and higher lows, higher highs and higher lows if it bounces back. And if this breaches this 101.3 area, this is a huge, massive breakout, which is going to play till, in my opinion, right here, like around 109, 110 level in a very short amount of time. I say week to months rather than taking multiple years like other analysts are predicting. I think this move is going to take everybody by surprise. All the dollar pair are going to be moving bullish in dollar's favor. And I don't think, in my opinion, whatever I've seen so far, that the market is ready for this move. Nobody is predicting this. Nobody is talking about it. Everybody is gone and they're after crypto, they're after so many other things, but nobody is talking about this particular move. And I think it's about to surprise everybody. Okay, so I just wanted to kind of show you guys my thought process as to what I'm looking at right now and what I think is going to happen in over the next 2, 3, 4, 5 days. If this thing, so this is 100.3 or 100.5, so let's round it up to 100.5 is the real area to watch. Once it breaches, guys, it's fireworks. There's a lot of momentum, there's a lot of chop here. See that sideways chop is a lot of momentum building here. There's a lot of weak hands being kind of shunned out. So there's a lot of energy being built under this move, and once it breaks above, it's going to be crazy. Okay, actually, another view I usually want to take is let's inverse this chart and see how it looks. Now, you tell me, guys, the price is going higher or lower? I have a pretty good idea. It's going, in this case, lower. That means the DXY is going higher. So it's filled in all the boxes. It's checked all the boxes. Divergence, moving averages, trend line, everything under the book is working absolutely by the book. And this is where you make real money, guys. This is where you can turn your $1,000 account into a $10,000 account in a matter of months. Not that I'm saying that you should do it. Make sure you have your proper trade management. Make sure you have your proper risk reward in place before you chase this move. Do not chase it, guys. Go slowly into it. If you have a $1,000 account, maybe you want to open a trade of 0.01 for every 100 pips, something like that. So, but something to keep an eye out on, which is this is going to be the next big thing, in my opinion. That's going to be the theme for the next 6, 8, 9, 10 months, and it is going to wreck the market. I'm telling you, this dollar move that nobody is talking about right now, it is going to wreck the market. While I'm here, let me also point out to this another move that is underway with dollar against Indian rupee. Indian rupee is in a slow motion crash. Let me pull that chart up. Okay, so that's an inverse chart. So let me Alt-I. Let me zoom out, guys. So this is a daily chart. What else this? Let me remove all the drawing. Okay, guys, look at this, guys. What does this chart tell you? That it is in a slow motion wreck. It's a slow motion train wreck unfolding in front of our own eyes. And once it breaches 90, so every dollar is worth 89.21 rupees. And once it breaches 90, guys, fireworks. And once it breaches 100, rupee is dead. Dead in a way where that the move from 100 to 150 is going to be rapid, is going to be fast. There's going to be crazy inflation in India, as is for gold. Is making crazy moves already in gold. See, you may not see a whole lot of movement in gold in terms of dollar, but when you see gold in terms of rupees, when you see gold in terms of Turkish lira, in terms of any of these BRICS currencies, the gold is screaming high. It's going to the moon, and I think things are only going to get worse for all these BRICS currencies as the West slows down, guys. Yes, we all want BRICS to win. We all want India to go and get ahead, Russia to get ahead, all these countries. But they are so dependent on the demand from the North America. They are so dependent on the demand from Eurozone that if these two areas, the North America and Eurozone, are slowing down, there's no way BRICS or their currencies can strengthen or can do good because their internal demand is not that strong. But again, that's topic for another video. That's it for now, guys. I'll talk to you soon. Bye.